Hello. So it's the run-up to the US election, and what we've been seeing is that the dollar and the S&P 500 are correcting down. We will see how we believe this could evolve over the next few weeks. We will start with the hourly chart of the euro dollar. The hourly chart, which had been correcting down during the most part of October, has recently reversed up and is now just above its correcting targets, pointing to impulsive targets into the 112, 113 levels. If we look at the daily chart, we do have to mitigate this a bit. We're still in a downtrend and it still has potential down towards 1065 to 104. That said, it is getting oversold, both on our risk index and with both envelopes touching each other. So the move up that we've just seen, although we can't confirm a reversal, may be the first steps to a bottoming process. If we look at the weekly chart or the perspective over the next few quarters, this would fit quite well. Indeed, we have been correcting up since 2015, and this correction up never really was able to trigger a new sell-off. And so it is gathering, it is basically building quite a good base, especially that our risk index is now heavily oversold. So we would expect this correction up perhaps to start moving up again over the next few quarters. If we summarize the situation, with a bull on the long term and a bull on the short term and a consolidation in the middle, we are in a potential resume uptrend, so resume uptrend in a consolidation period. Now looking at the Japanese yen, if you can see, the yen has also been strengthening against the dollar in the run-up to the election. We can see that quite a strong move following a nice rally during October. The targets could lead us back into the 101, 99, high 99 levels. That said, if you look at the daily, we were in quite a constructive consolidation up. And we believe that this consolidation up, which has seen our envelopes turning up, could continue following this correction that we've seen. So what we believe is that we're having here some kind of a retracement and that we will move higher towards the end of the year. Potential targets in first instance between 106 and 110. Now we have to see this in light of the weekly chart. The weekly chart is still quite negative, so the move up that we would consider, we do have to see it as a correction up at the moment. It's a very interesting levels historically because it's in this strong support and resistance zone. So although we are constructive and we may want to see more into 2017, to the upside, we do have to respect the long-term trend, which is still heading lower. So we are conservatively correcting up on dollar-yen at the moment. If we look at the summary, well, it's still a downtrend, so we do have to still be careful. We think that we've built a base, or we're continuing to build a base, and that we should correct up over the next few months, and we're having a short-term setback at the moment. Looking at cable, well, cable was heavily oversold during the month of October and is now reacting up. It has reached its corrective targets between 123.60 and 125. We believe that the 125 level will serve as strong resistance. That said, the daily chart or the perspective over the next few months, although it doesn't seem quite over yet, has almost reached its target and is getting oversold. So, given a bit more retracement, we believe that we're building a base here that could lead us higher into the early 2017. The weekly longer-term chart over the next few quarters is also not quite over yet, but it has also pretty much reached its target and is also oversold. So if we look at the situation, we have an intermediate bottom here, which is reacting up, has reached its corrective targets. We believe that the overall situation is beginning to be constructive, with the daily pretty much having reached its targets and being oversold, as well as the weekly. Yet we cannot confirm this downtrend is quite over yet. So expect more work. Now looking at gold, gold has been moving up in light of the upcoming election. It does have targets which could lead us back up above 1330, possibly to 1353. If we look at the daily, it was in a correction down, which has been in place since July. It's interesting to see that it is the reverse move than what we've seen on interest rates, which have been correcting up. And we believe that as interest rates, and that is our scenario, continues to move up, this should limit the upside. That said, in the meantime, we finish a correction up and we're starting to move up again on gold. Looking at the weekly chart or the perspective over the next few quarters, we could see the first move up, which was very strong during the first half of the year, the correction that we've just seen, and we're starting to move higher back into this correction zone. We do believe that because of the interest rate argument mentioned before, that this zone is going to be very sticky. So we expect very strong resistance at some point over the 1400s. In general, you're in a correction up, so an uptrend, a consolidation down on the daily, and a short-term bull. So you're in a potential resume uptrend in what is a consolidation period. Finally, looking at the S&P 500, it's pretty much now in oversold territory. There's a few more days towards the election, but we believe the bigger part of the sell-off has been done. It's reached its targets, it's oversold on our risk index, and our both our envelopes are touching each other. This consolidation down, which has lasted since mid-August, was a bit stronger than we expected. It has moved below the September lows and is now attacking the zone, which was the one prevailing just before Brexit. That said, we do believe that there is a potential to the downside, but that the timing of this correction is almost done. So there's probably a few more weeks left maximum, but we still could see risk down to the 2040 and down possibly to the higher 1900s. Yet, at the moment, we believe the long-term trend is still up. So we don't want to over-dramatize this situation at the moment. So the weekly chart is still heading up. It is showing signs of stress on our envelopes, but our risk index is not overbought yet and would still have some leeway to move up. Targets have been done, but we could always envisage another level of targets, impulsive 2 targets for very, very strong moves. So in general, still heading up over the long term in a consolidation, which seems oversold over the short term, which does have a bit more risk over the medium term, but the timing of it seems to be quite over. So we would expect that possibly from mid-November, the S&P should start moving back up again. And that's it for this week. Thank you very much.